you. So as Christopher just mentioned, I'm Caitlin Glenn. I'm one of the auditors here at NPERS. And when we were working on creating this material, I really wanted to incorporate my experience as a school plan member, being a former teacher and school counselor, as well as what I see from the auditing perspective. And so we have a lot of material we're going to cover. You'll hear me talk for quite a bit of time, but I promise at the end you'll get that break in between a presentation. So if you have questions that come up, please jot them down or put them in the Q&A section so that we can answer those at the end. But I do hope that with the material that we'll be covering today, that we can answer a lot of questions that you may have as well. So let's just go over what we'll be covering today. We'll start off with some of the heavier materials, specifically beginning with LB 198. We'll look at immigration status eligibility updates. We'll look at termination rules pre-LB 198 and post-LB 198. And within those two sections, we'll look at someone applying for a distribution and someone not applying for a distribution. We're going to go over what stayed the same and as well as what has significantly changed. After that, we'll look at non-contributing employees, tracking of hours, the definition of seasonal employment, what the statute says, documentation regarding non-contributing employees. We'll look at non-U.S. citizens. Then we'll get into contracts for salaried employees, what the statute says, why it matters, and documenting changes. We'll get into extra duty agreements for regular employment with extra duty assignments, and extra duty to me I use as an umbrella term to cover all of the kind of odds and ends jobs like coaching, concession stands, ticket taking, keeping book, just all of those sorts of assignments that come up. We'll look at how hours and wages are being reported. Does it align with service being rendered? We'll look at determining eligibility with those hours, and then we'll transition into tracking and reporting hours for contributing employees. And we'll touch on class covers and whether you should report those hours and what that looks like, and then touch on documentation for that as well. Then we'll get into bonuses and stipends. We'll look at what the statute says. We'll look at our process within NPERS and the audit team, the questions that we ask and the information we review when we make a determination on whether something should be reported for compensation for retirement purposes. And then we'll also review the quiz questions that was sent out about a week and a half ago or so. Those are throughout this presentation. There's quite a few during the bonus and stipend section, but I also want to just take a moment and thank you all for answering those questions and putting in your responses. If you didn't get that link, it's okay. I know some people registered a little later, as well as some of the emails may not have been up to date, or not everyone was registered as an authorized non-con agent within our system. So it's all right if you didn't get that link, but I did want to at least say thank you to everyone who did participate in that. And then also know that if we go through it and you realize that you answered it incorrectly, that this is supposed to be an educational experience, and we're going to be looking at the responses in a pie chart and break down like what the average was for the responses and what our answers are. After bonuses and stipends, we'll get into unpaid leave and non-contributing member forms, different types of leaves, why it matters to turn in those forms, and our requirements. And then we'll touch on some internal controls, specifically around some common audit findings. I highly encourage you all to consider throughout this presentation what controls are in place within your district, what improvements could be made, or are there processes that could be strengthened, and how can we help? So keep that in mind as we go through this, but we'll just dive in right away with LB 198 and immigration eligibility updates. So previously, in 2022, we had received the Attorney General's opinion on the eligibility for immigration statuses just because it was a confusing and frustrating process. And so upon receiving the Attorney General's opinion, our guidelines then were to have schools submit that documentation for NPERS to review based on the Attorney General's opinion. We also had our legal counsel, and then we would review the status and make a determination if it was an eligible status. With LB 198, that has changed to make it significantly easier, and we'll talk through that right now. So as plan employers, you must review all new hire and rehire documentation to determine their immigration status if they're not a U.S. citizen, so that you can ensure that if they're eligible and they meet the requirements, they get put in the plan, or if they're ineligible, you have that documentation on file to support that they are ineligible. If the employee is code 33, which is the DACA status, they are not eligible. It's still important, even if they're not eligible, that you keep that documentation on file to support why they were ineligible. It's also really important that you have those conversations to inform your employees, to notify you and bring in updated documentation if they have a status change. And in addition to that, it's also really important that as you are having those conversations, as you are reviewing your information, that if you have expired documentation, that you're getting those updated documents so that you can then review too to see if there's a status change. If the employee is anything other than C33, that DACA status, review the documentation to ensure that it does support current lawful presence, but essentially anything other than that C33 status should fall in the eligible or the lawful presence documentation. But you need to keep that documentation on file to support why either someone was eligible or ineligible, and then continuing to have those conversations with your employees to notify you if and when their status changes so you can make a review and determine if eligibility has since changed. As plan employers, ensure all current employees have documentation to support eligibility or ineligibility based on the new requirements with LB 198. So if you have not gone in and done a review of the employees that were previously ineligible due to their immigration status, we do ask that you go in and conduct that review, as previously ineligible employees may be eligible as of March 19th. If there is an employee that was not reviewed and you have realized that they should have been enrolled in the plan as of March 19th, you do need to go in and make adjustments accordingly. This is a list of accepted documents that support citizenship or lawful presence. The main ones are going to be the state-issued driver's license, a state-issued ID card, passports and visas. I know there's a lot more schools starting to partner with the sponsorship programs that bring over teachers from other countries on typically J1 visas. That's an accepted document, but just making sure that the documentation you have is one of the ones that's accepted that supports the lawful presence or citizenship, and you're keeping a copy of that documentation on file. Okay, so that was LB 198 with the immigration updates. Next, we're going to get into termination compliance guidelines. We're going to begin by looking at those guidelines pre-LB 198. So if a member terminated all regular service on or before March 18th, 2024, and I'm emphasizing on or before March 18th just because LB 198 came into effect March 19th. So before we dive into our examples of someone applying for a distribution and someone not applying for a distribution pre-LB 198, let's review a few things to remember. So pre-LB 198, upon termination of all regular service, the 180-day separation period began immediately upon termination. And in order to take a distribution or in order to stop contributions, they had to have that bona fide separation period. So an example would be if someone in a regular position, such as a para, wanted to change into a substitute role, in order to stop contributing to the plan, they had to have a bona fide separation. So let's take a look at an example of someone terminating all regular employment and applying for a distribution on or before March 18th, 2024. So in this example, we're going to have a termination date of March 1st, 2024. Knowing that they had to have a 180-day separation period, that separation period would go through August 28th, 2024 if they terminated on March 1st, 2024. So then from March 2nd to August 28th, they could not provide more than 8 calendar days of substitute or voluntary service in a calendar month. And when we look at that and we have a termination date of March 1st and their separation period goes through August 28th, and then we look at our statute requirements and we're saying no more than 8 calendar days of substitute or voluntary service, what about when the separation period ends before the end of the month? In this example, the separation period went through August 28th. Our best practice and our guidance was wait until September 1st to render any additional service. So waiting to render, the 9+ substitute or voluntary days or the unlimited substitute days voluntary service until the beginning of the month following, just to ensure that you're protecting your benefit. So that was our best practice and our guidance. Let's define day of service. So a day of service, when we're referring to providing up to 8 calendar days of service in a calendar month, a day of service refers to any length of voluntary or substitute service provided within the calendar day, regardless of the length of service, whether that's 5 minutes or 10 hours, it counts as one day. I bring this up just because I have seen within audits where substitute service is tracked, and if you have someone that provides a half day on a Monday and a half day on a Tuesday and then a half day on a Wednesday, it was recorded as 1.5 days when it should be recorded as 3 days of service. So just understanding that day of service is any length of service provided within the calendar day. As employers, it's your responsibility to track all substitute and voluntary service that's being rendered within your school district. For employees, it's their responsibility to track all substitute and volunteer service rendered at all of the school plan employers. If a violation were to occur, a new 180-day separation period had to begin, and the member had to repay any distribution received. Missed employee and employer contributions have to be made up for all service provided from termination until the violation. Next, we'll look at terminating all regular employment and not applying for a distribution on or before March 18th, 2024. Again, we're still in the pre-LB 198 guidelines. So members who terminated all regular employment on or before March 18th, 2024, but did not apply for a distribution must comply with the 180-day separation period rules to stop contributing. This means that for 180 days following the termination of all regular service, only up to 8 calendar days of substitute or voluntary service per calendar month are allowed. After 180 days, unlimited substitute service or temporary service, voluntary service, it is allowed. But what happens if the separation period extends beyond March 18th? So for this example, we're going to have a termination date of January 18th, 2024. Noting that a 180-day separation period with that termination date would go through July 16th, 2024. So now that we know the beginning and end date of that separation period, we can also see that March 19th, 2024 is in the middle of that separation period. So we have a termination date of January 18th, 2024. To stop contributions, the member can only provide up to 8 calendar days of substitute or voluntary service in a calendar month for the next 180 days. As of March 19th, the new rules apply. Members now can provide unlimited substitute or voluntary service or temporary service immediately upon terminating all regular service, but then the member will have to redo their 180-day separation period once they've submit an application for distribution. When we look at temporary service with the new rules, it's important to note that the temporary service cannot be an extension of their regular service, and there must be clear documentation that supports that they did terminate from their regular service and were rehired in the temporary role or transitioned into providing substitute service. I will say some of the best supporting documentation for this would be a non-contributing member form, as well as any other documentation that would support that transition. However, if the member were to just continue with providing no more than 8 calendar days in a calendar month until through July 16th, then their separation period requirement is satisfied. So the member can choose to take advantage of the new rules as of March 19th, or they can comply with the previous rules and not have to redo their separation period. So it's really important that you as employers are having those conversations with your employees to understand what they're doing and which rules that need to be applied. Let's look at termination compliance guidelines after LB 198. So if a member terminated all regular service on or after March 19th, 2024, there are some things to remember. So upon terminating all regular service, there are different rules to apply for members if they are taking a distribution or if they are not taking a distribution. And you as employers need to know what rules to apply. And the best way to understand what rules to apply is going to be having those conversations with your staff. Did they take a distribution, or are they planning to in the future? If they are, when is that time period? If they have taken a distribution, when was the valid application received? So having those conversations, calling NPERS to verify what their separation period is, if they have taken it, can be very beneficial to make sure that you as employers have the information that you need. So if the member is not taking a distribution, this law change was really made to help address the shortages of substitutes. So now, upon terminating all regular service, members can stop contributions and begin providing substitute or temporary service. However, it's important to remember that you have to have that documentation that supports that transition. But if the member were to apply for a distribution, they still have to comply with the rules for the 180-day separation period for proof of termination. So let's look at someone that is terminating all regular employment and is applying for a distribution on or after March 19th, 2024. Let's just begin by looking at what hasn't changed, because there's quite a bit that will remain the same. No more than a total of 8 calendar days of substitute or voluntary service per calendar month within all school plan employers combined can be provided during that 180-day separation period. So again, they're limited to up to 8 calendar days of service within a calendar month of substitute or voluntary service. There cannot be any prearrangement to return to regular service. This includes verbal agreements. Calendar day still refers to any amount of time worked or any voluntary time worked within the same day, regardless of the length of time that is worked. Any other service, including filling in for a vacant position or coaching, or that extra duty service that tends to fall under regular service, is going to be considered a violation. Violations then require repayment of the distribution to be made, plus make up contributions for the employee and employer portions. Employees still have to track all substitute and voluntary service rendered at all school plan employers. Employers must track all substitute and voluntary service rendered within your district, and it's still important that you understand the rules and which rules to apply, so then you can also have those conversations with your employees and make sure that they're aware of what limits that they have in order to protect their benefit, or in order to plan if they are planning to take a distribution in the future. If a violation occurs, a new 180-day separation period has to begin, and the member must repay any distribution received. Let's look at some of the changes. There are a few that are very significant. The start date for the 180-day separation period is now determined by the later date of the member's termination date, or the date that NPERS receives the member's valid distribution application. So I want to point out here that if you have someone that retires in May of 2024 and they wait until December 2024 to turn in their application, even though it's clearly past 180 days from when they retired, we have to go off of the later of the two dates. So in this instance, this example, the separation period then begins upon receiving the valid application in December. So as an employer, you have to know what rules to apply, which means that you need to have those conversations to know if and when the member is going to be requesting a distribution, or if they have requested one, what that separation period is. And again, you can reach out to NPERS to confirm the information if you need to. We will say yes or no. We can provide the dates, but we don't give out any other information. And then in order to know what that separation period looks like, it again refers back to whether they have turned in their application, or if they're planning to, what that date looks like. So the best way to understand what rules to apply is to have those conversations and really create open lines of communications to get as much information as you can. Violations. So if a violation occurs and it does not include regular service, missed employee and employer contributions will not need to be made up as of March 19th, 2024 and on. If it happened before March 19th, 2024, that's different, and you can reach out to us if you have questions. However, if the violation does include regular service, missed employee and employer contributions have to be made up. Sorry about that. Will need to be made up from termination until the violation. Next, we're going to look at LB 198, specifically terminating all regular employment and not requesting a distribution on or after March 19th, 2024. So upon terminating all NPERS eligible regular service, and continuing employment in an ineligible position such as temporary or true substitute service, the member must have clear documentation that supports a termination from regular employment, best supported by a non-contributing member form, and contributions must stop immediately upon that termination. Upon terminating all regular service, the employee can immediately provide unlimited substitute or voluntary service. Again, temporary employment cannot be an extension of their regular service, and as employers, you need to have that documentation on file that supports that they terminated from that regular service and transitioned or were rehired into temporary or began providing that substitute service. And as soon as NPERS were to receive a valid distribution application, their 180-day separation period must begin, which means that they can then provide no more than 8 calendar days of substitute or voluntary service in a calendar month. So then those separation rules apply. Next, we're going to begin by looking at non-contributing employees and common audit findings. So this is when we start to see some of those pre-quiz questions come up. These weren't included in the copy of the PowerPoint that was sent out, but we're going to talk through each one. Let's begin with this first one. So per the Secretary of State, General Records for Local Government, after termination, how many years must employment history records be kept on file for employees in a defined benefit plan? This one was pretty split between forever and 50 years, but per the Secretary of State General Records, it is 50 years. I have this question in here because I have run into situations where I'm looking at someone in an audit that had terminated their employment and took a benefit. And when I go back and I ask for documentation, maybe their contract from when they had previously been employed, and it's not available for me to review, we look at what the Secretary of State General Records says, which is that employment history record should be kept on file for 50 years after termination. But what about employees that aren't in a retirement plan? How long should we keep those employment history records? And this one again was pretty split. But in this instance, it's at least 10 years after termination. So anyone that is ineligible and non-contributing, you should have that documentation for 10 years after termination. If you were to have any questions on these, you can pull these up. You can always reach out to us. Next, we have a true or false question. Summer employment is always temporary, so employers do not need to worry about eligibility requirements. The key word here is always temporary. We'll actually look at what the statute says regarding seasonal and temporary employment in just a bit, but in this instance, the answer is going to be false. It is not always temporary. That doesn't mean that there can't be instances when a summer employment is truly temporary, but we can't say that it's always. Coaching and extra duty services generally fall under which retirement classification? There are 3 classifications. There are temporary, substitute, and regular for those 3 classifications. And so when looking at this question, the key word is going to be generally, because generally coaching and other extra duty services is going to fall under the regular classification. And remember, when I say extra duty services, it really is that umbrella term for all of the different types of extra duty assignments and work agreements that are in the various districts. But typically it's going to fall under regular. But again, that doesn't mean that there aren't instances where it could be temporary or substitute, and we'll get into that more a little later. Matt is hired to coach wrestling and only works 3 months of the school year. Matt confirms with the school at the end of each season that he plans to return. What classification would the service Matt provides fall under? And in this instance, when I'm reading this question and I see that Matt is hired to coach in this position, well, Matt is that person hired, so it can't be substitute. I see that Matt is only going to work 3 months of the school year, but if I keep reading, it notes that he informs the school that he plans to return at the end of the season for that next year. So knowing that he's planning to return, it can't be temporary because it's going to extend past 1 year. So knowing that, that really only leaves regular as the option. An employee who currently contributes to the retirement plan has decreased their hours from 40 hours per week to 19 hours per week. Is this employee still eligible to contribute to the plan? And when we look at the answer for this specific question, we have to look at the kind of plan we're in. Upon being hired, it's a single plan employer, meaning that your staff have to establish eligibility within your district to contribute to the plan. Once eligibility requirements are established and met and they're enrolled, they contribute on all wages and hours worked. The only difference would be to stop the contributions if there were to be a true termination and they were to transition into temporary or substitute with the new guidelines of LB 198. In this instance, if they're just decreasing their hours from 40 to 19 in that same regular service position, it is not justification to remove them from the plan. If an employee meets all the requirements to be enrolled in the plan, but they do not want to participate, should they still be enrolled? Absolutely 100% yes. It is mandatory when the requirements are met. If you have any employees that are saying they don't want to be in the plan and they're really pushing back, maybe consider having a conversation with them about how great this plan is, because having the opportunity to have a lifetime benefit heavily based on the service credit rather than what's being contributed to in the contributed to from their employment, it makes a big difference. So making sure that they have understanding of what the plan is, and if there's still pushback, you can have them give us a call and we can talk through it more. But essentially, if they meet the requirements, it is mandatory. An employee who does not meet the hours requirement to be enrolled in the plan does not want to track their hours. The employer knows that the employee is hired to work only 4 hours a week. Doesn't matter if hours are tracked. And the answer is yes. It does matter that hours are tracked because one, you don't know what the future holds. There could be instances where that employee begins to provide other service. Maybe they coach, or maybe they occasionally provide substitute service. So if you're not tracking, you're not going to have the information you need in order to make a determination if they've hit eligibility requirements. In addition to that, if we look at the statute breaks down regular employee. And if you look at the bolded and underlined part, it says an employee hired as described in the subdivision to provide service for less than 20 hours per week, but who provides service for an average of 20 hours or more per week in each calendar month of any 3 calendar months in the plan year shall begin with the next full payroll period, commence contributions, and shall be deemed a regular employee for all future employment with the same employer. So essentially, if they hit the requirements, the 20 or more hours average in any 3 calendar months, they have to be enrolled. If you're not tracking hours, then there's no way for you to be certain that you're abiding by the statute requirement. So it's very important to track those hours. And in addition to that, having the hours tracked and keeping that information on file is another way to support if they truly were ineligible and weren't enrolled in the plan. Let's look at some common audit findings around non-contributing employees. Lack of documentation. So no documentation on file to support ineligibility. This goes back to maybe not having hours tracked at all. There's no information that outlines their employment, especially if we look at temporary employment. Do you have that information that supports that there's a clear start and end date, that it's less than a year? So a lack of documentation, and keeping in mind the Secretary of State for employees not in a retirement plan, you have to have that employment history file for 10 years after termination. Not enrolled upon meeting eligibility. So either maybe the employee met the hours and they just weren't enrolled. There could also be instances where hours are not being combined when reviewing to see if they met the requirements. Sometimes things just slip through the cracks, and if you're a district that has limited human resources and there's only one person reviewing the information, sometimes when someone has met the requirements, it may not be caught all the time. Stopping contributions with hours decrease. So we reviewed that pre-quiz question just not too long ago, but essentially upon establishing eligibility within your district, they have to contribute on all hours and wages from their regular service, regardless of how many hours are being worked. If they were to have a true termination and transition into a temporary role or transition into substitute, and they're no longer providing any regular service, then it would be reasonable to stop contributions. In this instance, if they're still providing any regular service and they've established eligibility within your district, they have to contribute even if they've decreased their hours. Eligible immigration status not checked. And so prior to LB 198, we talked through what our previous guidelines were, that we were reviewing the documentation based on the information we received from the Attorney General and our legal, and providing a determination on if it was an eligible immigration status. In some instances, there were documents not submitted to NPERS for review. And when looking at some of those documents, we've seen some where it was truly an ineligible employee, but best practice was still to submit it to NPERS for a review. But then there's also been instances where it wasn't submitted and they did have an eligible status. In addition to that, we've also seen where a document upon hire was an ineligible status. Upon the document expiring, there actually had been a status change where they had a qualifying status to be enrolled, but it wasn't properly obtained and it wasn't then reviewed, which meant they weren't enrolled in the plan in a timely manner. So it goes back to having those conversations, reviewing what documents you have on file, making sure that you have your employees coming up and notifying you when there is a status change, and then also making sure that if you have expired documents that you're obtaining the updated copies. For hours not being accurately tracked, there's been a few different examples we can talk through. So not required by the district. This goes back to that statute that we just looked at. So if the employee hits that average threshold of 20 hours or more in any 3 calendar months and they're in that regular service classification, if you're not tracking those hours, how are you going to know if they need to be enrolled in the plan? Having an assigned hours per position. This could be specifically speaking when you have an extra duty assignment, say a coaching position, and there's just an assigned number to that role. So for example, volleyball gets 60 hours for the season. Well, if you're not accurately tracking hours, you can't truly make a determination if they hit the hours threshold. So for retirement purposes, we do have to have accurate hours tracked that either supports why someone was enrolled in the plan or what the hours were that were reported, or to have it support why someone was ineligible. For bus routes, this tends to come up when we have a district that pays their bus drivers per route rather than on an hourly basis. We won't tell you how to pay your employees. it's absolutely fine if you want to pay your bus drivers on a routely basis. However, for retirement purposes, we do still need the actual hours worked being tracked in order to support why they weren't eligible to be in the plan. Terminating regular employment but continued coaching. For this, we're going to just talk through an example. So say we have an employee that is retiring and they're a teacher. They also provide coaching services and they coach track. So that teacher is retiring and they are wanting to come back and coach track in the next year. So they say, well, I'm retiring in May. Track isn't until late February, early March. That's outside of 180 days. I should be fine. When we see situations like this, it tends to be a termination violation, and we're going to break down why. If we look at what the statute says, you can read the entire paragraph if you want. I'm going to go through the bolded parts because it's what is relevant to what we're talking through right now. But it breaks down that employment does not it's not interrupted by temporary or seasonal suspension of service that doesn't terminate the employee's employment. So when we look at someone that historically has provided an extra duty service, the example I gave was coaching track, and they terminate and they apply for a distribution, and they then come back that following season and provide that same service, and we look at what the statute says, that's one reason. So the statute says seasonal suspension doesn't automatically terminate an employee's employment. In addition to that, if we think back to the termination rules, we talk through what hasn't changed. And one of those topics was prearrangement. There can't be any prearrangement, including verbal, to return to regular service. So when we see someone that has terminated and then they come back the very next season, how do we know there wasn't a prearrangement to return to that regular service? So as we talk through this, I want you all to understand that us breaking it down and going through the statute, going through what we see and what we question is really our intention of, one, protecting our defined benefit plan, maintaining a qualified status, but also making sure that we're protecting our members' benefit. So when I say the average hours threshold, I'm referring to the average hours worked in that calendar month. And this formula on the screen is the only accepted formula by NPERS. And the reason why is because it follows what's outlined in statute, and it's also one of the more simple ways to calculate an average. So in order to calculate the average hours worked, you're going to take the total hours worked in the calendar month, so not the reporting period, not the payroll period per se, but the total hours worked in the calendar month, and you divide that by the total number of days in the calendar month. This includes weekends. You then multiply that number by 7. If the number you get is 20 or more, it is a qualifying month. After 3 qualifying months in the plan year, which is July 1st through June 30th, enrollment is mandatory. It's also important to note that the 3 months do not have to be consecutive. We take an example such as someone being a seasonal coach. Say they only work February, March, and April. If they hit that hours threshold, February, March, and April, and then they don't provide any other service until the following February, that's when you would enroll them. So even if there is that break from the end of season, you still would have to enroll them if they met the requirements in that next payroll period that they're working. This is a resource that we have on our website. It's an Excel sheet, and it's something that I like to talk about because I think it's really awesome, especially if tracking the hours for non-contributing employees and doing the calculations is something that your district either struggles with or you're looking at a way to make things easier or improve your processes. I think this is a really great resource because it breaks down the information for you. So you have your calendar month column pre-filled in. You have the total number of the days in the calendar month pre-filled in. You enter the total hours worked in the calendar month, but it is important to note that you have to put the total hours as a decimal. So if someone were to work 88 hours and 30 minutes, you put 88.5. Then in the next column, it's going to break down for you that average and calculate it. So in August, with 88 hours worked, it was 19.87 as the average. But then we look at September, which only has 30 days in the calendar month. That same 88 hours is 20.53 as the average. In the status column, it then will pop up as a qualifying month. After 3 qualifying months, it'll pop up in the enrollment indicator column that the employee must be enrolled in the plan on the next pay period. So again, this is a resource we created. It is not mandatory for you to use, but it is there if it's something that your district would like to use. Next, let's look at contracts for salaried staff. We're going to talk through some of the common audit findings, beginning with start and end dates on contracts or renewal agreements. So when we look at a contract and we see language that's on or about, for example, beginning on or about August something, ending on or about May or June something, whatever those dates are for your district. The on or about language can lead to some trickier situations. One, we'll look at the statute next and what it says around start and end dates. And then two, when we look at the perspective from our benefits team, they have to use the end date that's listed on the contract. So say we have a contract that says beginning on or about August 15th, ending on or about June 1st. Well, that employee finished all of their obligations in May and they went to apply for their benefit. Because the contract has a June 1st date, that is the date that the benefits team has to use when processing. So it can cause delays in benefit calculations, but essentially benefits have to use the end date that's listed on the contract. If we have a contract that doesn't have an end date, the benefits team then has to collect 3 years of historical data from you to be able to look for patterns, to be able to identify when the end of the contract really is. Typically, if there's extended contract days, they have to be able to identify which year to attribute those extended contract days. And it does become a lot of work for both you and the benefits team. And then in addition to that, it can cause delays in processing those benefits. When we are talking about extended contracts, if we have someone that has an extended contract, say they have 10 extended contract days that they have to work by June 30th, and they choose to get them all done by the end of May, and they go to apply for a benefit, we have to look at the historical data. So is this someone that typically is ending their contract at the end of June, like the contract says? Is this someone that's trying to fulfill their obligations to get early retirement, to get extra monthly retirement benefits? The benefits department has to review all of this information to ensure that there are defined benefits being processed and to ensure that there's no sham terminations. So it's really important that we have these clear start and end dates and that we understand just how it impacts not just you and your staff, but also how it impacts when someone wants to go and apply for a benefit. When we look at changes in contracts, specifically if we look at someone with a multi-year contract, I typically see this with principals, administrators, superintendents, and if we have a contract that's 2 years and the second year the employee gets a pay raise, and there's no updated documentation, then what they're being paid, or what's being reported, I should say, what's being reported does not align with what's outlined on the contract. And so then we have to review and dig deeper as to why there's a difference in what's outlined in the contract versus what's being reported. So typically our best guidance is when there's contractual changes or changes in the contractual terms and agreements, such as a salary change, to either do an amendment or draw up a new contract. Another point we can talk through here would be doing an amendment for an early end of contract. So if there's a 9-month employee that has then an amended contract to be providing their service for only 7 months instead of 9 months, NPERS expects to only receive 7 months of the contractual wages to be reported. So that partial fulfillment to then represent the actual amount of service that's being rendered. So they can't have an amendment to have an earlier contractual end date and then still have that full 9-month salary being reported. If you were to have any questions with this, or if you just want to verify that you're doing something correctly, you can always reach out to us and we can take a look at the information. But that leads us into our next point with signatures on contracts and record retention. So especially if you're making updates to contracts, but just in general, it's really important that we are able to see that signed copy of a contract if we're asking for it, especially like in an audit, but just in general, if we're reviewing a contract and it's not signed, the things that we have to consider are, is this the accurate contract? Were the terms agreed upon, or is it an internal control issue around record retention? Especially when we refer back to the Secretary of State, where it says employment history records, that file has to be kept on hand for 50 years after termination. So if we're looking at someone that's still currently employed and you don't have that signed copy on file, that leads us to question, is it an internal control issue? So let's look at what the statute says. So again, you can read the entire paragraph, but we do have it highlighted where it says that the contractual period of employment has to have the starting and ending dates of the contract. For termination, it says that the date of separation is the end of the member's contractual agreement. So this is where we're getting that information. And our goal is to break down the reasons and the why. So what does the statute say? How does it impact the benefits team? What are our rules and regulations? And our goal is to really provide as much information to help break down why we say we need certain things and why we have these policies and procedures. So again, if there's any other questions, please drop them in the chat. Please reach out to us, but I promise there are reasons for the way that we do things. And our end goal is to maintain a qualified status, to have consistent practices within our 264 plan employers, and to protect our members' benefits. All right, we're going to transition into extra duty agreements. When we're looking at members that also provide extra duty assignments, we look at how the hours and wages are being reported. Specifically, are the hours and wages that are being reported aligning with when the service is actually rendered? For example, if you have an employee that is hired for seasonal service and you're reporting hours and wages over 12 months, does that align with when the service is rendered? Then we also look at, what does the employment agreement say, or the contract, depending on what your district utilizes? Is that in alignment with what's being reported and when? We also review if the hours are being tracked and reported in the correct monthly report. I was personally really terrible at this. I would track all of my hours and I would track them accurately because I was paid hourly, but I wouldn't turn it in until the end of the season. And it really took a conversation and eventually me being employed with NPERS for me to realize how much extra work I was creating. So we look at hours being tracked and reported in the correct monthly report, but also I know that you don't always get the information when you would need to be able to submit it with your monthly report. And in those instances, if you don't have it available or if it's reported in the incorrect monthly report, that's when we look at those adjustment forms because we do need accurate wages and hours reported. For 1,000 hour or more staff that hit the mark to receive their full year of service credit, we tend to receive feedback where sometimes there is pushback on them tracking and turning in their hours. For staff that work 1,000 hours and receive their full or more and receive their full year of service credit, the responsibility is on them to track and turn in their hours. There are instances, though, where if they would have tracked and turned in hours, it could make a difference at the end of the year with their total service credit. So, for example, we've had where members suddenly pass away mid-year. And if they would have tracked their hours from their coaching responsibilities, they could have received that full year of service credit. And knowing that the type of plan that we have is heavily based on service credit, it then impacts the beneficiary's benefit. In addition to that, there could be instances where someone has to go on leave, maybe a family member's sick, maybe it's maternity leave. But if you have to suddenly go on an unpaid leave where you're not getting service being reported, you don't have hours being reported, then considering that if you had tracked and reported the hours from your extra duty assignments, it could make a difference in your service credit. But at the end of the day, the responsibility is on the staff for staff that work 1,000 or more hours to receive a full year of service credit, the responsibility is on them. As employers, you can remind them, you can request the hours be turned in, but if they don't turn it in, it is on them. Any staff that are under 1,000 hours or non-contributing, the responsibility is on the employer. We've still had employers reach out and say, well, the staff refuse, we don't know what to do. Unfortunately, I can't tell you how to address that. You'll have to bring the applicable stakeholders to the table to determine the best steps. I can say I've had districts reach out afterwards and say, well, we changed our terms of employment. They signed the agreement upon being hired that they will turn it in or they won't get paid. But at the end of the day, we can't tell you how to address it. We will tell you, though, that the staff under 1,000 hours and the staff that are non-contributing, the responsibility is on the employer. So if you are facing that pushback, it might take having a conversation with the athletic director, maybe the superintendent, maybe the board, whoever the applicable stakeholders are on how to address this going forward if it is a policy change. We also look at if wages and hours are being combined when determining if someone is eligible to be in the plan. Or if someone is already contributing, if the hours are being combined and reported. So for example, if you have someone that is part-time, maybe we'll say a para in this example, they work 10 hours a week, they're not contributing, they haven't hit the hours threshold, but then they suddenly agree to sponsor a club. We look at then, are you combining all of their hours when reviewing to see if they meet the eligibility requirements? Because as soon as someone is in that regular classification, all hours have to be combined when reviewing for eligibility purposes and making that determination. And then keeping that information, that documentation on hand to support why someone wasn't eligible is important as well. What if a substitute agrees to provide extra duty service? I'm going to ask that you hold on to this question for just a moment. And I'm going to ask that you hold on to one more question. What if an employee is hired to only provide an extra duty assignment, so such as coaching, sponsoring a club, maybe managing concessions? And so in order to answer these questions, we have to look at the classification buckets. There's three, so temporary, substitute, and regular. Regular is the only eligible classification to contribute to the plan. So if the job doesn't fit into temporary, it doesn't meet the requirements to be substitute, it's going to be classified as regular. Temporary employment is defined as 1 year or less, and when the job is complete, employment ends. Substitute is temporarily filling in for a regular employee that is temporarily absent. It is not filling in for a vacant position or an employee that's hired to come in every single day, regardless if someone is absent or not, so such as permanent subs. It also does not include on-call activity, or like on-call positions, activity, bus driving where, for example, or other activity driving positions where there isn't someone hired for that position. So if the job doesn't fit into temporary or it doesn't meet the requirements of substitute, then it falls into regular. So when we look at these questions, what if a substitute agrees to provide extra duty service? What if an employee what if an employee is only hired to provide an extra duty assignment, such as coaching? Where do they fall? And that is not an answer I can provide you. As employers, it is your responsibility to identify which bucket they should be falling in. Because if we look at a substitute that is agreeing to provide some form of extra duty service, you have to review your facts and circumstances to decide, is it truly temporary? Is it 1 year or less? And when the job is complete, employment is ending? Is it true substitute service? We have seen, for example, a coach that goes on maternity leave. That was someone hired for that position, and someone came in to fill in temporarily while that employee was temporarily absent. And then there's the regular classification. I can't tell you which bucket to put them in without having all of the facts and circumstances. So with questions like this, as employers, you need to establish which bucket they're going to fall into and then keep that documentation for why you put them in that bucket and the reasoning behind it. We're going to look next at tracking and reporting hours for salaried staff. We have just a few more sections and then we'll get you all a break. So to begin, we're going to look at supporting documentation for reported hours. Some common audit findings would be hours reported without documentation, without supporting documentation. So if, for example, if we look at salaried staff, and in this particular month, every salaried staff has a base hour of 152, and that was determined by their working days calculated by multiplied by their working hours. And then I'm looking at one staff that has 158 hours reported, and I say, hey, I see that this specific staff member has 6 additional hours reported. Can you please tell me why? And I get an answer of I'm not sure, or I couldn't find anything. That's an example of hours without supporting documentation. Another example of a common audit finding would be having a set or predetermined amount of hours being reported for salaried staff, just because that's your process. The reason that this is an audit finding is because it leads to inaccurate reporting of hours. Not all reporting periods have the same number of working days, so it leads to inaccurate, some months over-reporting, some months under-reporting of hours. And again, We have a plan that is heavily based, the benefit is heavily based on service credit. So it is very important that we have accurate hours being reported. In addition to that, part of maintaining a qualified IRS status is having consistent processes between all of our school plan employers. So we want to make sure that someone in one district with similar service credit is getting a similar benefit to someone in another district with a similar service credit. So that's another one of the reasonings behind why we do things and why we have policies and procedures and all of our explanations. The third point is going to be 0 hours reported with wages. The only exception here is going to be summer months for certificated staff that are salaried and do not render service all calendar year. So teachers, principals, I haven't seen a superintendent with a 9 months contract, but if there is one, they're certificated as well, but this is the only exception. So 0 hours with wages. Another example could actually be if you have someone on an unpaid leave and your district offers a docking option. However, that information should be communicated with accounting. They'll need the docking schedule and some other information, but then the expectation is that you go in and do an adjustment at the end of that leave. Otherwise, there should be no instances of 0 hours being reported with wages. When we look at the fourth point, reporting a set standard of hours regardless of the contract or regardless of how many months they worked or the days in the month, there could be a couple different examples here. Especially if we refer back to that second bullet point, having a set amount of hours being reported because that's the process. So if that's your process and your system filters in 160 hours regardless of the hours being worked or being calculated, then we go into those summer months, and if that's the process where it filters in automatically and you don't have staff actually rendering service, you're going to have hours being reported when service isn't being rendered. This could also be applicable to districts that are having their hourly staff being treated like salaried staff, and they're estimating hours and reporting those over 12 months rather than having them reported when they're being worked. So these are some examples of audit findings. And here are some preferred documents that help support reported hours. Time clocks, so like clock in, clock out systems. Even though this is listed as a preferred item for supporting documentation, I will say that with time systems, please ensure that you're using accurate hours when you're reporting. So I've seen districts that round up to the next quarter hour. And so if you have someone that works 31 minutes, but they're getting 45 minutes worth of that hour being reported, it impacts the calculation. So just making sure that you're utilizing accurate hours. Having hour logs that someone fills out, that could be paper, that could be Excel sheets. I've seen Google Forms, sign in or out sheets in the office. We do have an accepted formula where you can calculate a base hours for salaried staff, and we'll go over that on the next slide. And then any other documentation that would support hours worked, such as maybe an email from a staff member. But just note that we understand that the first 4 points doesn't necessarily encompass all supporting documentation. So other documentation that would support hours worked is fine. So that accepted formula is when you take the number of working days in the reported period and you multiply that by the hours in a working day. So you'll have to look at what's been established as the hours in the working day for your district, but you multiply those two to get your base hours for that period. This is only for salaried staff, such as teachers. However, you then need to add any additional hours worked in the same reporting period that you have supporting documentation for that were worked outside the working day. So such as someone having one of those extra duty assignments. If you have the documents that show that they did indeed render service outside of that working day, then you would need to add that to your base hours. One of the questions that comes up quite a bit is around class covers. If a teacher loses their plan time or their prep time due to a sub shortage and having to fill in and cover a class during that time, should that hour be reported? And the answer is it depends. If we have someone that has their formula, if we go back to this formula and we see someone that's using 8 hours in a standard working day, and that plan time is included in that 8 hours, then you're already reporting that hour for that plan time. And you can't give them 9 hours for 8 hours of work. If your district does not include plan times in your base hours for calculating your working day, which I haven't run into yet, but if for some reason that your district didn't include that plan hour in your base working day hours, then it could be reasonable to report that hour that was lost when class covering. We've also seen where there is expectations outlined in the master negotiated agreement that if a teacher were to lose their plan time due to having to cover a class, then the expectation is that they have to make up that lost plan time outside of the working day. So in this instance, it could be reasonable to report that hour, but if we see that document and we see that hour reported, then from our perspective, we still ask, well, do you have that confirmation that that hour was indeed worked outside the working day? So then just making sure that you have the documentation to support that. So in this scenario, it really just depends on what your processes are for your district. Next, we're going to talk through bonuses and stipends. And before we get into our quiz questions, let's look at what the statute says. So for compensation, the statute specifically says that it's gross wages or salaries payable to the member for personal services performed. It also says that compensation does not include unused sick leave or unused vacation leave converted to cash payments. It doesn't include insurance premiums converted into cash payments, reimbursements for expenses incurred, true fringe benefits, bonuses for services not rendered, and some other options as well. But for the purpose of the bonus and stipend questions we'll go through, these are really key points. From the auditing team, we have a set standard of questions that we request from schools when we are looking at a bonus or stipend and whether it should be reported as compensation for retirement. And when we review this information, we also bring other applicable stakeholders to the table to talk it out. That could be our benefits team, that could be our legal team. We look at historical information as well, but we wanted to give you the insight as to what information we need and what we review before we go into those questions. So we look at, does the employee have to render service to receive the payment? Is it tied to service that's been rendered in previous years? Is it for existing employees or will new employees get it? Is it only for certain employees? When are the payments going to be made? Does the employee have to repay anything if they quit? Is it in the master negotiated agreement? Is it in the staff contracts or the work agreements? Is it paid through payroll? Have you offered it previously? And if you have, did you report it to NPERS then? So these are the questions that we ask and the information we need when we're reviewing if a bonus or stipend should be reported. Let's look at the first question. A school is offering new hires a bonus of $3,000 if they sign a contract to provide 3 years of service. It is a one-time payment upon being hired. If the employee terminates their employment before the 3 years are up, a prorated repayment of the bonus is required. Should this bonus be reported as compensation for retirement? And if we look at the responses, it was pretty split. In this instance, if I'm referring back to what the statute said compensation is, which is essentially, or compensation includes, which is wages that are tied to service, and I read through this, I see that a new hire is going to get $3,000 if they sign a contract to provide 3 years of service. Okay. If I keep reading, I see that if they terminate their employment before their 3-year contract is up, they have to repay a prorated amount of the bonus. So knowing that they have to repay part of that bonus if they terminate before their 3 years, I can say that it's tied to service. And because it's tied to service, it should be reported. If you have any bonus or stipend questions, maybe your school's implementing one or you have one and you haven't communicated with NPERS, please feel free to send us the information and we can take a look and review it and provide some guidance. Our next question is: a principal receives $75 as a phone stipend every month. Should this be reported? And the answer is no. Phone stipends tend to fall under fringe benefits or it's listed as a reimbursement, but this is not eligible to be reported. A school offers employees that decline health insurance a stipend each month of what the insurance would have cost the school. Should this stipend be reported as compensation for retirement? In this instance, referring back to what the statute said, compensation does not include, it said that compensation does not include health insurance premiums converted to cash payments. In this instance, when I read that if they decline health insurance, they get a stipend for what that insurance would have cost, I can say that that is not an eligible compensation for reporting purposes because it's listed under what compensation does not include. If your district offers cash in lieu, I would still highly recommend sending that information to NPERS for review so that we can ensure that it is a true cash in lieu policy. Again, any questions, please drop them in the Q&A or reach out to us after the webinar. A superintendent's contract notes under the compensation section that if student testing goals are met in the district, the superintendent will receive a $10,000 bonus to be paid in July. Should this be reported? And this is one where we see again that it's very split. Now, in this specific situation, all of these questions are based on stipends and bonuses we have seen. I personally was not here for this specific example, so I cannot break down in clear details the reasonings behind it. Other than that, the applicable stakeholders that came to the table to review the information were able to tie it to service. And as soon as it's tied to service, it should be reported. Certified staff receive a set stipend amount each time they attend a professional development training in the summer. Should this stipend be reported as compensation for retirement? And I'm going to say, in this instance, the answer is going to be yes for current employees that have been hired already. If you have a new hire coming into your district and they have a contract start date of August, and their contract does not outline that they have to attend specific trainings in the summer before their contractual start date, then they need to establish eligibility before being enrolled in the plan. Upon the start of their contract, they would be enrolled. But when we look at teachers who are new to a district attending workshops, say like July before the school year starts, if it's before their contractual start date, then you have to establish eligibility before enrolling them. A school has implemented an incentive bonus program as a way to increase retention. Certified staff that are employed and work from August to December receive a $750 bonus with the January payroll. Certified staff that are employed and work from January to May receive an additional $750 bonus on the June payroll. If an employee works through December and then resigns in January, they still receive that first bonus. Should this bonus be reported? And here we can see it's pretty equally split between yes, no, and unsure. So let's break down why I say and the audit team says yes, it should be reported. And it goes back to wages being tied to service. So if we read, we see that if the employee works August to December, they get that bonus, meaning that they have to work August to December. So even though they get to keep it if they were to terminate come January, they still had to provide some service in order to receive it. Again, if you were to have any questions on whether a bonus or a stipend should be reported on, please feel free to reach out and ask for guidance and send us that information so we can take a look and review it. But again, as soon as we are able to tie it to compensation that's being tied to services rendered, it's compensation that should be reported. Next, we're going to look at unpaid leave and non-contributing member forms. So when to submit a non-contributing member form? When there's an unpaid leave of absence, you would submit a non-contributing member form. You would check the leave of absence box on the form. This could be for maternity leave, bereavement leave, a long-term temporary absence. You would also submit one for military leave. You check the leave of absence box. If you have any employees that are on military leave or will be, please refer to your military service guidebook. You can also reach out to NPERS with any questions. You would also fill out a non-contributing member form when there's a termination of employment. In this instance, you would check the permanent box rather than the leave of absence box. This is also a good way to support a termination and transition into a termination of regular service and a transition into temporary employment or into substitute service, such as the LB 198 new rules allows. In addition, there is currently a third box on the non-contributing member form, and that is transfer. You do not need to worry about utilizing that box. If you mark it as a transfer, the termination date doesn't actually filter in. We are working in the upcoming months on updating the non-contributing member form. So if you have any feedback or if there's ways we can make it more user-friendly, please feel free to reach out and let us know. So why is it important to submit a non-contributing member form? Well, per our rules and regs, a non-contributing member form must be submitted by a plan employer within 20 days of an interruption in contributions or upon termination of employment. This form notifies NPERS of the change, the reason behind it, and it also acts as supporting documentation for the school when there are status changes. But it also acts as supporting documentation when a member wishes to come back and purchase service credit that they missed when they were on a unpaid leave of absence or on military leave. So it's very important that we get these forms in. In addition, when we look at non-contributing member forms, when a member is retiring, it's important that these forms are being turned in at the end of their contract rather than when their last payroll is being reported. There is a section on the non-contributing member form where you can outline when the last contribution should be reported. But please note that if you are waiting to submit the non-contributing member form until that last payroll has been processed, it does cause a delay in processing a member's benefit, as our team cannot process that benefit without the non-contributing member form. Let's go through some examples on whether or not you should submit a non-contributing member form. The school has been notified that an employee is going to take 2 months of paid leave to visit a sick family member. Should a form be submitted? And in this instance, the answer is no. It's not required because there's not going to be an interruption of contributions because the employee had 2 months of paid leave they could use. A school's been notified that an employee will need to take 3 months of medical leave. 1 is paid and 2 are unpaid. Should a non-contributing member form be submitted? The answer is yes, you should submit one when there is an interruption in contributions. You would want to submit the form after the 1 month of paid leave is over, and the interruption of contributions would be noted on that monthly report. The school has been notified that an employee is not going to return for the next school year and has accepted a position at another district. However, the employee still plans to finish out the school year. Should you submit a non-contributing member form? And the answer is yes, you would submit one upon termination. Here are some common questions about unpaid leaves and non-contributing member forms. Why would I need to submit a non-contributing member form if I'm docking pay from future payroll periods in order to cover the unpaid leave? They technically still have wages that I'm reporting on. Well, in this instance, we would expect to see an adjustment form submitted if you are docking from future payroll periods to attribute the correct compensation in the correct monthly reports. However, it is also important to note that if there are wages being reported when there is no service rendered, a member who comes back and wants to purchase that service credit from when they were on that leave cannot do so. They're not able to purchase that service credit when there are wages reported. Is it actually important that I submit the non-contributing member form and do the adjustments? And why would I submit one if I know they're returning? This all goes back to one, our rules and regs say that you should submit one within 20 days of an interruption in contributions. And also knowing that the member has the right to purchase back that service credit. If there are wages reported when service isn't rendered, they're not able to come back and purchase that service credit. The non-contributing member form is also good supporting documentation for when they do come and request to purchase it, that we have that information already. What hours should I report during the leave? Well, the answer is, what hours are they working? If they're not working any hours, then we should not expect to see hours being reported. If it's paid leave and they're taking and using their vacation leave or sick leave, then we would expect to see those hours. But for unpaid leave, if they're not working any hours, then we shouldn't see hours being reported. I forgot to submit a non-contributing member form. What do I do? Well, in this instance, the non-contributing member form is still important documentation. So you are still able to go in and submit one, but it's very important that you mark the leave of absence box. Again, all of this information just is to break down that it helps the member when they come and want to purchase their service credit back. And then it also gives us information from NPERS side as to why there's stopping of contributions, especially if we're looking at historical data and we're processing a member's benefit. And it's also great documentation for you as employers if there are transitions from someone being in regular service and they're transitioning into a temporary role, or they're transitioning into substitute service, which they now can with the new rules from LB 198. This is our last section. So as a reminder, I highly encourage you to consider what do you have in place currently for internal controls and processes, and what could be updated or strengthened. And is there anything that you need from NPERS in order to help you with that? So here are some common findings on internal controls. Retirement contributions not being properly set up. And I've seen something as simple as the wrong percent being set up in payroll, even being set up as only $9.78 a payroll period instead of it being a percentage. And we tend to see these findings more when there is a lack of segregation of duties. And what I mean by that is having multiple sets of eyes on the information. Now, I'm aware that not every district has the same amount of human resources available. In those instances, I've also seen superintendents agree to step up and review the information. I've seen other applicable human resources staff step up, but I just want to at least note that I understand that not everyone has the same amount of resources available, but a segregation of duties is best practice because one, it helps minimizes errors. Two, unfortunately, tragedies happen. And so if you're the only person doing your role and suddenly you were unavailable, who would be able to come in and know how to do what you do? And then three, it's also a great way to help minimize fraud. Documentation retention, so just referring back to what the Secretary of State had for employment history file, being 50 years for members in a defined benefit plan, you're needing to keep those on file for 50 years after termination. For the members not in a retirement plan, it's 10 years after termination. And then also keeping documentation when there's contractual changes in those terms of agreements, or any other documents that would support why something was reported, or if there was a change in statuses. Misunderstanding the purpose of the beneficiary form. The beneficiary form is not what is used to update demographic information. That should be updated on your monthly report. The beneficiary form is a form you should be giving all new hires and rehires if they meet the enrollment requirements and they're being enrolled in the plan immediately. You give them that form and it's on them to turn that in. It is a huge deal if something were to happen. They need to have a beneficiary in place, or it could go to an estate. But at the end of the day, if they meet the requirements, you enroll them in the plan and the demographic information comes from your report. Not providing all new hires and rehires the application for vesting credit. This is important because they only have 180 days to get that turned in. Rehiring staff and not verifying with NPERS that they have an account balance. This goes back to the type of plan that we have. Upon hire, it's treated as a single employer plan, meaning that they have to establish eligibility within each district in order to contribute for that district. So if you're rehiring someone and they previously had been contributing, you need to verify if they have taken a distribution or recently requested one, or if they still have an account balance. Because if you rehire them into a regular service position, then regardless of how many hours they work, they would have to have the hours reported and to contribute on the compensation if they are hired in that regular service position and they have not taken that distribution. So verifying if there's an account balance is very important. And then not updating the authorized contact form when there's a change in reporting agents or superintendents if you list your superintendent as an authorized contact. This is very important because we cannot see when someone in your position as like a reporting agent or a payroll person is terminated and should no longer have access. So until we are notified that that person should no longer have access, they can still log in. And they're still listed as an active authorized non-con agent and they can call in. So it's very important that as there's changes in employment that you update the information, the authorized contact form, so we can either add the applicable people or we can remove those who shouldn't have access anymore. So that is all that I have for my presentation. I have our general audit email up on the screen right now. So if you have any questions that you want to email us individually for, you absolutely can. Otherwise, I know Vanessa has been working hard on the Q&A and the chat questions as they come up. At this time, I'll leave this email up for just a moment, but at this time, you are actually going to get a 15-minute break. So it's 2:43, almost 44. So please be back by 2:59 so that we can transition into the next part of this webinar. And thank you all again for jumping on, for hearing me talk for as long as I have been, but also just being here so that we can get this information out to you. I know that every reporting agent I have ever worked with takes pride in the work that they do, and that retirement is very complex and difficult, and it's only a small part of what you do. So taking time out of your day to come and learn about the changes, learn about what we see, and then our processes and our reasons behind everything is just amazing, and we appreciate what you do. Enjoy your break.
Yes,
Okay, welcome back, everybody. First of all, hopefully everybody can hear me. Sounds good. All right. My name is Cathy Maestas Graham, and I'm the other training specialist here with NPERS. Hopefully you were able to refresh during the break and you're ready for our next part of the webinar. So I know there was a tremendous amount of information that was covered in the auditing presentation, and I'm sure you have a lot of questions. Don't worry, we definitely are here to answer all of your questions, as well as I just wanted to reiterate, I know Christopher had mentioned that the Q&A was in there. So that Q&A, if you aren't able to access that because we're getting some messages that some people can't, those will be reviewed during the Q&A session. So don't worry about that. We will definitely get all your questions answered, and make sure that we don't leave you with things that aren't answered. All right, you have an incredibly important job. We do know that, and we are here to help. So please make sure that you utilize us, whether that be us asking us questions or via the website. All right, so a few key takeaways regarding LB 198 and immigration eligibility. What are these? Well, first of all, one important point to note is that employees with DACA status, that is Code 33, are not eligible to contribute to the plan. Also, remember, it's up to you as their employer to keep documentation that supports ineligibility on file. Indeed, as the employer, you must do so. Likewise, you will need to review all new hires and rehires to determine if their immigration status has changed, and it's up to you to talk to them and ask them periodically check in to have them notify you if there's been a change in status. All right, again, the relevant accepted documents, there were several of them that Caitlin listed in her presentation to prove whether or not someone had citizenship or lawful presence. You can also locate them in the PowerPoints that we provided you via email. And I believe there was also a link placed in the chat with the guidelines for immigration eligibility. But there are some common examples that you're probably going to see most often, and that they are a state-issued ID card, a birth certificate, a U.S. passport, and a foreign passport with a U.S. visa. Now, the requirements for immigration eligibility became effective on March 19th of this year, 2024. So if you happen to discover that someone who should have been enrolled wasn't, then you need to submit the appropriate adjustment forms accordingly. It's crucial that you go back to review all files for current employees, not only to ensure that you have the documentation on file, but to also revisit previously ineligible employees. All right, before we move on, there's a very important question that I would want to address, and it wasn't covered in the last presentation, and that is, does LB 198 affect anything else? It absolutely does. It can majorly affect required minimum distributions, commonly referred to as RMDs. What is an RMD, you ask? It is It just means that depending on someone's age, a person who has terminated regular employment must take a distribution of their retirement account according to the IRS. And if someone misses the deadlines to do this, there can be major consequences, like losing out on taking a lifetime benefit. We definitely do not want that to happen to anybody. So, when does the RMD clock start? The time when a person's RMD clock begins to tick is at the end of their regular employment. Even if they are still providing unlimited substitute voluntary temporary services. LB 198 makes it so that a person could stop all their regular employment and provide only substitute, temporary, or volunteer service, even if they don't take their money. We fear that a person may still consider themselves as actively working, even if the IRS does not. If you have any questions about this, please feel free to ask during the Q&A. We don't want anybody to miss out because they missed their deadline. And to help avoid this, we actually are going to be sending out inserts to everybody who gets annual statements. We're going to start sending those out at age 67 to warn them about RMDs. So again, just to reemphasize how important RMDs are, let's walk through this once more. All right, if a member has terminated regular employment and submitted their paperwork, then they're on the right track. But if they're still working as a sub, volunteer, or a temp, then it doesn't matter if they were termed or not. They must start their benefit before the RMD deadline or they will lose it forever. If the member is actively working as a sub, a volunteer, or a temp, then they must act right away. The sooner the better, actually. All right, so with that in mind, we don't want that to happen to anybody. So please visit our website at npers.ne.gov. That's NPERS at ne.gov for more information regarding LB 198 or contact our member services at 402-471-2053 or the 800 number is up there as well, 800-245-5712, choosing option 1. Our best advice to give you is if someone is unsure about their position, contact NPERS immediately, and that would be the best rule to follow. All right. I would like to introduce our next speaker for our accounting piece, and that is going to be Sami Spieker. And I'm going to give her just a moment because she's going to share her screen with her presentation. Thank you.
Hello. My name is Sami, and I have been in accounting for a little bit, and I've been working on the monthly reports the last few months. And that is mainly what I'm going to be covering in my section here for accounting. It's going to be mainly the contribution reports and the stuff we see on that. And then I'm going to cover adjustment forms and a little bit on the non-con forms as well. To start out, for any new members that you have that are going to be starting in the plan, we require you to give them 3 separate things: the member handbook, a beneficiary form, and the application for vesting credit. Caitlin touched on these a little bit as well, but just to reiterate, the application for vesting credit must be submitted back to us within 180 days of employment to be valid. The beneficiary form, it's not a enrollment form, so you're required to give it to them, but they do not need to return it to us for you to enroll them into the plan. It's just good information to have to make sure that in the case of a tragedy, their money gets sent to who they want it to get sent to. And as well, while I'm on that, we must have an original copy of the form that they physically signed, mailed into us to be valid. Emails are nice, but unfortunately they are not legally valid for our office. And the member handbook is just useful information for the plan that they are now going to be a part of. To focus on that wage and contributions monthly report, they are due on the 10th or the next business day of the following month. For example, the May monthly report is due on June 10th or the next business day. If you do not have the report confirmed by that due date, a late fee will be charged to your account. And then if they are not posted by the end of the month, you're going to get an additional late fee every single day that it is past that date. We know things happen. Let us know if something comes up. But I'm trying to reiterate this to please respond to our questions in a timely manner, because we don't want you to have late fees. It's more work for me. So yeah, please reach out. Please answer our questions if something happens. Yeah. There's 3 different ways to upload a monthly report: uploading it from your payroll system, copying member records off the most recent posted report, and manually enter everybody in. Since I've been doing this the last few months, I have noticed sometimes we run into issues with the copying member records off the most recent posted report. I want to focus on the posted part there. It does show when you pull up to work on your monthly reports. It does show which one's posted and which ones aren't. Just because if you have 2 monthly reports that were uploaded fairly recently and both confirmed in a short time, just double check to make sure that you are pulling information from which month you want it to go to, because if it's not posted, it's going to pull off farther back than you are expecting it to. Service credit, those are the hours that you will be reporting each month for the members. Those hours that we consider regular hours should include working days, used sick and used vacation time, and any donated leave. I want to focus on the used sick and vacation times because we have had many times recently that if somebody's leaving, member is leaving the school and they're going to pay them out their unused sick and vacation times, those are not to be reported. They're not eligible. So just to reiterate, it is only used and used sick and used vacation time. To focus on adjustments, the school is responsible for entering the adjustments, and you're going to enter them on your next monthly report, or when you are ready to, on the next month on a monthly report. The first step of doing so is to fill out an adjustment form and send that to us. You can do this by fax, share file, or encrypted email, or physically in the mail. I will say that the encrypted email is a little bit flaky sometimes, so I would prefer if it was physical mail, fax, or share file. And the next step is to enter the adjustment on your monthly report. When entering the adjustments, when do you do so? If it is excess contributions, if you accidentally took out too many contributions for them, we will only go back 1 year of the date of discovery. That is because the member will get a refund on our side, but the school will lose out on their contributions sent to us if it is not done within 1 year of discovery. If it's any missing contributions that should have been reported, that is back forever, 20 years back, 5 years back. We want those to always be done. This is our adjustment form. It is used really as a template for when you're entering it in the system, and it provides us documentation on when and why you are doing so. So to start off, here in this section, submitted on the web via this month and year date, that is when that is the month, the wage and contribution report that you are entering this adjustment for these adjustments on. It's not the reporting period that you are doing the adjustments for. And then the explanation, that is just give us a short reason why, what happened, that sort of thing. In this highlighted section here, that is the reporting period that you are adjusting. So that's going to be like May 1st to May 30th, June 1st to June 30th. Each reporting period that you are adjusting, you will need to have a separate line for each reporting period for each person. There's no quick way to go through these, unfortunately. It is the same on my end. So this highlighted one is the hours reported to us. That column is where you enter in the incorrect hours that was reported to us previously. And then this column is going to be where you put the correct total hours it should be. That is that side. And then this highlighted column, the hours adjustment plus minus, that is going to be, this form will calculate what the actual adjustment is. And this is what you are going to be entering in our system. That is because our system registers an adjustment as a true adjustment. It's not a replacement by any means. So if you look at it on our system, it's going to always show the incorrect amount, and then it's going to show this plus minus what the adjustments that were entered, and then the total of those two is the correct amount, and that's how we calculate it. So again, this column is what you are going to be entering. And continuing on, it is the same thing for compensation. That's salary when you're looking on the wage and contribution report. So that's this highlighted column is going to be the incorrect compensation or salary reported to NPERS. And then this is going to be the correct total amount of compensation reported to us. And then again, the form is going to calculate what the difference between the two and the adjustments that will be put on our system. And then the next column is going to be the employee contributions. And again, the system automatically calculates that based off of what's entered in the adjustment column, and that's going to be also entered in on our system. When entering the adjustments on your wage and contribution report, you will do that after you uploaded that month's report, but before you confirm it. So to enter them, log in, work on ER reports, edit, enter the social security number of the person you were adjusting, edit record, and then at the bottom it should say add new record. And it's going to pop up what you see here on the side, the bottom left here. And you're going to use the adjustment form as a template, as I said. The record type, make sure you switch that to adjustment instead of regular. Because if you do not do that, if you do not change it from regular, it's not going to let you edit the date range of the reporting period that you need to adjust. And then like I said, change the report period to when you are the month that you are doing an adjustment for. And then the hours, that's going to be again, that adjustment column, the plus minus, that is going to be the hours that you are adjusting. And the reported salary is again that column that it calculates for the adjustment amount. And then once you have this entered, hit save, and then go through that for each line. Once you have finished it, go to header, edit header, and then add in the adjustment amount for the employer contributions, add that total into your total monthly employer contributions, and then hit save, revalidate your report, and you should be able to confirm your report at that point, and everything should be added correctly. On your regular monthly reports, for accounting purposes, we look at flags. So I'm going to be covering that here. You can also see them after you've uploaded your report and then after you've validated it. You can see any flags that pop up here under edit. It should be highlighted right here. And I'm going to go into what kind of flags we see, and then you will see some of these as well. Not all of them are going to show up for you. I was only told a few weeks ago, so the flags that you will see for sure, and these are ones that are going to suspend your report. So the first one here is the contribution amount does not match the percentage rate of salary defined by statute. So that is when that employee's contribution rate is not 9.78%. The way to fix that is just double check your math and then edit in and save the correct amount it should be. And then just revalidate your report and it should clear that flag and you should be able to confirm your report at that time. Another suspension flag is hire date must be within 1 month of the pay period begin date. That's just our system is checking to make sure that it's like, oh, hey, the hire date was way back and they're only now doing contributions. So it's there to make sure that we're not accidentally missing contributions. We most often see this with like part-timers who only now just became eligible. In that case, what you would do is you would go pull up that member's record on that report, and then edit the hire date to match when their eligibility date began. And then again, revalidate your report and it should clear it. You do not need to change their hire date in your system. That is only for our system, just so we have a record on when they became eligible. And the last thing, if you are trying to confirm your report and the report's not letting you, but no flags are showing up, try revalidating it again. And if not, go double check your employer contribution rate. Most often that is what I see is the reason why. Just make sure it's 101% of the employee contributions. And then make sure you check in to see if you've adjusted it, if you're doing any adjustments. And then it should clear through. And if it doesn't, reach out. Name changes. If you could see this flag pop up, it's down there here at the bottom. The Social Security number exists. The first and or last name is div new. NPERS policy is to have the name that is entered in our system to match their Social Security card. So if don't use nicknames, use their full name. If somebody's getting married, wait until you have verified that they have a new Social Security card before updating your system, because it does screw with our system. And you're going to get emails from us if you change it and it never did get changed and you have to change it for the W-2s and that sort of thing. We do not need the Social Security card sent to us. What we look for if we see this flag popped up, just leave us a note in the member's record that just says, "Hey, verified the social number, verified the social card, the name change, that sort of thing." Or you can, if you're a bigger school, you can just preemptively email us here in accounting. And we'll just save that into the record and you won't get an email from us about that. Flags that pertain to hours. Any member that has over 300 hours working, that's a flag for us. And we're going to ask you about it. So you can preemptively leave a note in the member's record about why they worked over 300 hours, because we're just checking through, because that's a little unusual. And sometimes it turns out the system pulled the wrong hours. So if you know somebody's working over 300 hours, you can just do a quick note in and you won't get any email from us about that. And anytime we see contributions in and the hours are listed as 0, that's going to be another flag. The only exception we tend to have for this is during the summer months for contracted employees. Otherwise, we really shouldn't see this. Most often, it's going to be maternity and leave of absence reasons. And you're going to get an email from us. It's going to have these 2 questions here at the bottom. Is the member on unpaid leave? That's just to verify that they are indeed on unpaid leave and the 0 hours is correct. If they are on, we're just making sure if they are on paid leave, you should be reporting those hours. And if you're going to be docking it, docking their pay, future, currently, that sort of thing, we just ask you to send us that information so that we can track your adjustments in the future, because we do want to do adjustments to take out those contributions and move them to when they did actually work. That is because when benefits is processing those purchase of service for maternity or leave of absence, they need to have 0 hours with 0 compensation for that time period. Otherwise, they will not be able to do that purchase of service for that member. So that is the reason why we're asking for to not see this, or if you do see this, do an adjustment to fix it later. And you can wait to do the adjustment after you're done docking it. That's pretty usual, but we do need those adjustments done once that time period has passed. 2 other flags that will pop up and that you will see or I will see. The employer reported termination date is different from the termination date in the system. That's just when the submitted non-con has one termination date and the termination date that is on the wage and contribution report are different. So just go in and edit whichever one is incorrect, and just leave us a note in that member's file about what you did, because we will do see what you did for there. Member was reported without a rehire date within 90 days of termination. That's just a flag for our system to catch if there's a non-con on our system, because we need one for all terminations. So if you see that pop up, just double check that you've sent a non-con in for that person. Otherwise, we'll be checking it, and if we don't see it, we're going to let you know. So this flag does not disappear at any point. So if you see this one and you verified the non-con is on the system, just overwrite it and clear out and you should be able to post your report. I'm going to focus on the non-con forms here. I'm going to walk you through them. There's two different ones, the permanent termination and a leave of absence. A non-con must be filled out for all breaks in contributions. To start off on the permanent one, although I do want to say this transfer option that you see here will hopefully disappear here in the next few months because we have decided that it is not needed. We'll just use permanent for any school transfers because they are permanently terminated from your school. So that's what we want for that instance. On the permanent non-con, we have the termination date down here that needs to be filled out most often. This date is going to be the last day they are contractually obligated to work for contract employees, or if it's an hourly employee, it's going to be their last day they physically work. There is exceptions to this termination date reasons. I was not able to put it on a slide because there's just too many other variables, but you can see it on our employer manual, and I have where you can find it in the manual linked down here at the bottom. Well, not really linked, but the page number that you can find it on our manual as it is currently. And then we just have a reason for terminating here. There you have some stock entries there, and there's a other that you can hit, and you will be able to give us a manually enter a reason why if it's something other than those stock entries. A leave of absence non-con. You can put a start date. You do not need to put an end date if you do not know when they are coming back. But we do need a start date on when we should expect that their contributions end. And the reason for leaving is the same as the permanent option. We have some stock entries, and you can hit other if you need to explain past that. Both of the non-cons will show this here at the bottom. The member's final retirement compensation will be on this reporting period. So that's the last time us in accounting are going to see any wages on a wage and contribution report. And just underneath that is hours, because not every school has these completely aligned. So that's why it's asking for wages here at the top and then hours at the bottom. This is the last time we're going to see it on a wage and contribution report for NPERS. And then this place down here with beginning date, the final service hours on this report will be or worked over this following period. That's going to be the last time they show up on your payroll, the beginning date of that last payroll for your system. That is when you would put your payroll date there. And then ending date here at the bottom, and that is the last day they are physically at work. And then I'm essentially done. There's my email there along with my coworker Danielle. We've had some personnel changes, so it is just us two for employer reporting right now. So if you have any questions, yeah, go ahead and reach out.
Thank you so much, Sami. We appreciate that. So at this time, we have time for question and answer, and I'm going to go ahead and let Vanessa and Caitlin and Sami probably direct those, because those are probably specific questions to either the auditing or the accounting team. But appreciate all this presenters today, and thank you for your time. For those of you that have stayed with us, I'm impressed. Almost everybody stayed on, so this is very important information for you, and we really appreciate that. So Vanessa, I know there may be some questions that you may have seen individually that you may want to reiterate to everybody, but I'll go ahead and let you take that over. Thank you.
Sounds good. Okay, I am just going to go through the question and answer. I did try and keep up on the answers as they were coming in, but just to make sure that we go over them verbally, and if there's any other clarifications that are needed, I'll just start going through the list. So the first question that we got was sorry, when new things pop up, I cannot see the question. If your employee summer help, are they considered a temporary employee? So the answer to that was just going back to those buckets, right? And what answers do you have to the questions that would determine what employment classification that they go into? So what is the intent at the time of hire? Are you hiring them to continue to work subsequent seasons? Are they hired for just one season? Are there clear defining start and end dates for that service? If there is it 1 year or less? If it's 1 year or less, or you just don't know, the intention upon hire is that you are going to hire them for this one season, then you can consider them temporary. If they come back that next season without clear termination, reapplication processes and documentation in place, then they would be considered a regular employee the second season. Anything to add for that, Caitlin, Sami? No? Okay. So the next question that we have going down the line is, what if a coach works less than 20 hours per week? So again, we first want to make sure that we're putting them in the correct bucket, right? If we have established that they are regular, the intention is that they're going to come back, or we don't have clear start and end dates that's going to keep them within a year and keep them in temporary, then once they're in the regular service bucket, we've considered them a regular employee, then we need to track their hours. So intention upon hire is that they're going to work 20 hours or less per week, then you track and keep that documentation on hand. If they were to go over that and meet the hours threshold for mandatory enrollment, that average of 20 hours in a week in any 3 calendar months for the fiscal year, so July 1 to June 30th, then you would put them in at that time. Next question I see is, do coaches that provide, say, only 3 months of service need to be contributing? Again, it's going to depend. So a lot of this is us telling you what the statutory definitions are, who is eligible for employment and who is not, and then looking at what facts, what are the facts and circumstances specific to you. So what do you know at the time? Are they going to be, are they in the regular bucket, right? So they're regular and ongoing. They're going to be coaching years. We've established that they're not a temporary coach. And then what are the intention of hours to be worked upon hire? So are they going to be working 20, 30, 40 hours a week for at least 3 months? Then yes. So it's just going to depend on what you have and the facts and circumstances surrounding that employment. Going to the next question, if someone breaks their contract and leaves in the middle, what documentation should we have to prove their last day? This is going to be different depending on who breaks the contract. That's kind of what I outlined in my written response. The way it reads now that I'm reading it out loud is maybe somebody breaks their own contract and it's not from the employer. So if I'm assuming that they're going to have to provide you some type of correspondence, written notification, something that says, hey, my last day is X, and that's breaking their contract. So any documentation that you can have to support when their last day is, correspondence between the employer and the employee will help for that one. And just really quick, I do see other things popping up. Are there questions that are popping up that I need to clarify? Anything that I've already said? That's okay. So I'll just keep going down the list. Okay. If something does pop up that what I'm saying doesn't clarify it, just let me know and we can stop and clarify those. So the next question is, should we not be paying coaches over a 12-month period? So again, NPERS is not going to tell you when and how to pay people, but we are more concerned about when retirement is reported to NPERS. So bottom line is wages and hours should be reported when they are earned and worked. So if your coach is rendering service 12 months out of the year, then yes, we should be receiving contributions and they should be reported 12 months out of the year. If it's a seasonal thing and they are only rendering hours and service during the season, then it should only be reported during the season. So what happens when those two things conflict? The first thing that I would ask you to do is talk to your coaches, talk to your ADs, talk to the people that are rendering the service and see when that service is being rendered. And if it, sometimes the reporting agent, what we have heard is a reporting agent says, well, the season is XYZ, but when they talk to the coach, they actually are rendering some type of service all year round. So they're looking at videos or doing camps or doing weight room, anything like that. So if they're rendering the service all 12 months, then yes, it should be reported all 12 months. But if they're only rendering the service for a couple of months, then it should be reported over those couple of months. There's things that you can do, such as adjustment forms, if those two things are in conflict. So the next question that I see is, why is there no hourly bucket for employees who have not yet met the requirement for regular? My answer was, I'm just not sure what you're asking in that question. So did anybody elaborate yet on that one? No. Okay. So if you're still on and you have, and you can clarify that question for me, I would be happy to answer it. I'm just not sure I know what you're asking for that. The next question is, so on number 3, how many hours do we report in the summer months for a teacher that does not work in the summer? And this was a slide that Caitlin presented that showed what the findings were, common findings. And the exception is for certificated employees that do actually render seasonal employment, but that their wages are paid and subsequently reported all year. So for those certificated employees that are off during the summer, but their wages are reported over the summer, then that is an accepted method, that it's 0 hours for the summer months, but that is the only exception. The next question I see is, what is the retention rate for supporting documentation such as time cards, extra duty hours? If you look at Schedule 9, 10, and 24, it's going to give you the very specific documents for those years of retention. Next question, an athletic event worker whose hours are being tracked, if they work an average of 20 hours per week during a calendar month for 3 calendar months, they have qualified for the mandatory deduction. And the answer that I provided, again, we try to make it foundational level, and what's the easiest way to understand that. And if you've heard me speak before, I mean, I say it every time, is that we're speaking 2 different languages, right? You have the language that you use at your employer, your school, that works for what you do, but we are obligated to go by the statutory definitions. So if we are talking about an athletic event worker, we need to put them into a bucket. Are they regular employee? Are they temporary employee? And so what documentation and information do you have to support what bucket they're in? So once we know that, then we can establish if they go in or if they meet the mandatory threshold. If they are regular and they're working 20 hours per week during an average of 20 hours per week during a calendar month for 3 calendar months from July 1 to June 30th, then they would go into the plan. What can we do when an employee resigns and was contributing to the plan, but they're, oh, okay, this one we answered privately. We have an email, because if somebody is contributing, we should have a record for them here at NPERS. So application for vesting credit, where can I obtain that? I think I provided, and I tried to just hit everybody with all of the forms that we talked about throughout in the chat. So if you are looking for something, please go to the chat too. All those links should be in there. The vesting credit forms are given to anyone who participated in another NPERS group like county or state. Is that correct? If they were at another school or coming back to the school after a break, that would be found a taken care of by NPERS. So vesting credit form, we talk about onus, right? And where does the onus lie and who needs to do what? You don't need to know where they've worked at the past. If we're establishing eligibility, it's a little different on if they've already established eligibility at your school, they haven't taken a distribution, they're in a regular employment classification, then they go in. But if we're just talking about that vesting credit form, it is just required that you give it to them, and then don't worry about where they've worked or what they've done, or that's on them. So you give them the vesting credit form, you give them the beneficiary form, and the employee handbook. And that can all be done electronically. Further on down the question and answer panel, we go through all of that. You can just give them the links to that. Somebody asked if you can just provide the website. You can provide the website, but make sure they know those three things. It is very important, and there can be some negative things happen if they don't get their beneficiary form in. It's not a requirement, but if something happens, who does that money go to? And if we don't have that, it's going to go to an estate, right? And there's very specific spousal rules that apply if they have a spouse listed as a beneficiary form that wouldn't apply otherwise. And then they only have so long to get that vesting credit form in. And if they don't stay long enough with you, then that vesting credit could really help them to be able to get that lifetime benefit, which is the beauty of this plan, right? And then that handbook, we just want to make sure that all of our employees and new members know about this plan and what the benefits are and what the rules are in particular. So those three things are really important. It's all put together nicely for you in a new member handout that's on our website as well. I think that link is in the chat too. There was a question about who needs to be on the contact for NPERS and when do you need to submit that. So anytime that you need us to be able to communicate with somebody for the employer, right? Not just calling in as a member for their own account, but if you need them to be able to communicate with us for the employer, you would add them to that sheet. So not necessarily just the people that are submitting the reports or filling out the non-cons, but make sure that their information is added to that. Commonly, you do see superintendents, you do see HR directors, but really that is up to each of you who those contacts should be. There was a question on what is the age required to take benefits. So that is, there's a lot in answering that. So I put the handbook on there and that will outline what the ages are. For that, can we give our employees the web address? Okay, we addressed that one. Let's see here. Is the most current employees handbook August 2021? It is currently. We are right now working on revisions to the handbook and the manual. So I think the manual was 2023 and the handbook is at 2021. So look out for the new versions on those, but I would say do go to the website to look for those tools and not have it printed out, because when they are updated, that's where you're going to be able to find that information. And no, you don't need to print out any of the beneficiary forms, vesting credit forms, or handbook. You can give them the link. We went over that. Okay, let's see here. I think we're getting to the bottom, and a couple that I haven't answered on here. So an employee resigned recently but is using 2 weeks vacation time and will also be paid for the remaining vacation time they have available. What do I use for the termination date on the non-con? So if it is paid leave where they are using it, then we would go to the end of that, and that would be the termination date. Couple of things in here that would be reported as compensation, right? But if it's unused leave, then we're not going to use that in a calculation of their term date unless they're using it. So it's completely up to them how they do that. But those wages would also not be reported for compensation. So rephrasing that just a little bit, if they are using leave, then we report the hours, we report the wages, and we use that as an extension of the date of their termination date. If they are not using it, it's paid unused leave, then it won't get reported. Hours, compensation don't get reported, and it does not extend that termination date. Oh, I went to the top here really quick. Let's see, there's another question. The teacher's cut, is that the next one that I'm on, Caitlin? Or was there one above that? If a teacher's contract
There's
ends,
one above that.
There's one above that. Okay.
Yep.
I think there's some answers coming in
Yep,
here too.
that's all right.
So when I,
Would you like-
oh, okay. Caitlin, you've got the next one. We have documentation from last year that a retention bonus should not have retirement withheld, but after listening to this presentation, it sounds like that is not correct. Yeah, so that is anytime we're looking at retention bonuses, which seem to be a lot more common now, it is really going to come down to your documentation and how you word it and how it's applied. If it is for service rendered, typically it's going to be that compensation for retirement. And if it's not for services rendered, then it's not. So it's beneficial for us to receive that information because we can sit around the table and look at the differences in the retention bonuses that other people have received and what the answer has been for those. So yeah, any of those retention bonuses, just go ahead and send in that information. If a teacher's contract ends 8/31, when do I submit the non-con form if they are not applying for a distribution? So Caitlin went over this in her presentation too. It's within 20 days of no contributions, right? So even if they're not applying for a distribution, we want to make sure we have that non-con in there. Yeah, you're talking on the right. Do you want to put your headphone on, or I'm sorry, I have Caitlin sitting right next to me, and so she's asking me a question, but it's in the ear that I have my headphone in.
So when I was reading that specific question, I suppose I just wanted to clarify, is it the contractual end date of August 31, or is that when the last payroll is being processed? So just making sure that from my side understanding, is it the actual contract end date, or is that just when you're processing the last payroll? Because a contract can end in May, and that would be their termination date based on that contractual end date, but then they can still have trailing contributions if they're a 9-month teacher having wages reported over 12 months. So just clarification for me.
So yeah, Dana, if you want to get on there, you can clarify that for us as well. But it's not for you for submitting a non-contributing form, right? It's not going to matter if they're taking a distribution or not. You just need to know, are they terminating regular service? So if they are terminating regular service, we need that non-contributing form to come in, because that's going to be really important too with the changes with 198, and that we now are able to have somebody substitute unlimited or provide temporary service immediately following their regular service. So that's one of those things that are really going to show that documentation to support their regular service has ended, it's terminated, and now they're doing something else. So when we're looking at those, that's what we're going to need. There's a question in the chat. Okay. Okay, so this one is, I'm just going to put on here, this was, we'll answer this one privately. Okay, so a question in the chat. Let me pull up the chat box here. Caitlin, if you know where, is it from Cathy Marvin? Okay, so Cathy in the chat has put, if I have already submitted a non-con form and now the person is coming back to train the newly hired replacement for a day, do I need to resubmit another non-con form? Is that employee being paid to train the replacement? At this point, I'm unsure. The principal hasn't told me yet. Just trying to be prepared. Okay, so it's going to matter whether or not you're going to contribute, because if you don't need to contribute, then you're not going to need to do another non-con form. If they're just coming back for a day and you do need to have contributions on that, then you would have to, I would probably actually just edit the non-contributing form. Sami, would you agree with that? Yeah, I would probably just, and Sammy's right here next to me as well. She said probably just edit it. So yeah, so no, I'm sorry, everybody is muted here. You just get to hear me for a little bit. So what Caitlin said is verify if they are applying for a distribution or not, right? Because that's when it's really going to matter as to what if you continue contributions and looking at the termination of employment rules and all of that. So 2 things for this one, Cathy, would be to go back and A, see if they are applying for a distribution, and B, seeing if they are going to get paid for that. I think, is there another question? Dana, you followed back. Great, thank you. This is end of contract, but hasn't worked since May, end of school, last payroll. So you are just talking end of like paying on the contract. And yes, you can enter. So the question is, this is end of contract, but hasn't worked since May, end of school. Last payroll is on 8/20. Can I enter the non-con before that date? And you can. There is a section on that. Caitlin went over it. I don't know if Sami did too, where you can put the last day that they worked, right? Their termination date, but then when they are going to get paid last. The last payment payroll date.
Yeah, so to clarify, we have a section for the last time it's going to show up in a wage and contribution report for NPERS. So that you would just enter in that case, their last working day would be the termination date, and then in the last time they'd show up in the wage and contribution report would be in the August, or depending if you are reporting in arrears or not, it would be August or the September monthly report.
All right, and going back over to the chat, I see that Cathy has added, so if they have applied for a distribution and they are getting paid for the day, then how should I proceed? So that's going to be important that you communicate with them and you communicate with us. If they are coming back to train for a day and they're getting paid and it pushes into the next month, I mean, that changes their termination date, and that could substantially change things. So this, Cathy, I would ask that you just contact us individually, and either, I think anybody here would be able to help you. So the audit team or Maria or Sami, reach out to us and let's have a conversation on that specific situation. Because what we really want to avoid, right, are any of those violation of termination, and make sure that everybody knows those rules and they're free and clear of that. So let's get some more details on that one. We can maybe provide you with some questions that you would need to ask. And information that we would need to know, and how to help you proceed on that one, if that's okay, Cathy. And I don't see any other questions on here. We can stay on, absolutely, if anybody has any other questions. It's kind of hard going back and forth to the questions and answers. So if you have a question, stick it in the question and answer part. When a new teacher is transferring here from another Nebraska school, do I fill out a new beneficiary? Do I have them fill out a new beneficiary form, or just report the first wages? Right, so just remembering how Caitlin went over that beneficiary form, and it is not an enrollment form. Okay, so if they have met mandatory eligibility at your school, it's a multiple plan employer, but upon hire, it's treated as a single plan employer. So if you have established that they have met eligibility at your school, you just put them in, and then you don't worry about what anybody else has done with them, if anybody else provided forms. So every time you have a hire or rehire, you provide that beneficiary form, you provide that vesting credit form, and that handbook. You just want to make sure that your box is checked, that you are giving that to your new members. Thank you, everyone.